all this can lead to market downturn. And there were demonstrations at one of the Apple flagships in Beijing. So imagine what could happen if there's an environmental disaster affecting communities. How is the company going to respond? Who is going to be the face of the company? Is it going to be the managing director or the chief executive? It doesn't necessarily need to be them. There has to be somebody who is going to be respected, who is going to communicate effectively with internal and external stakeholders, explaining positions, what is being done to address this risk. That is key in retaining market confidence, because competitors are out there and they're waiting for every opportunity to pounce on if anything happens to that company. So if they manage this communication and the management is aware of events and who is responsible, this can enhance the reputation of the company. Risk surveys that are carried out by insurance companies and other third parties like brokers and consultants, these help identify risks that otherwise the company would not know. And so these risk audits, most countries are now introducing legislation for listed companies to have risk audits done, so that the risks are reported and known, so that shareholders are aware of the risks the company is facing and what the company is doing to address these risks as a requirement on the listing. With all this, it's not done. There has to be implementation, there has to be continuous assessment, continuous reviews. Some of these reports can lie in shelves, and some of these reports can no longer be relevant if there is an intervening event or force rendering things to look different at the end of the day. So the report which was done last month might not be relevant next month. So there has to be continuous assessment. So lenders are more interested with their security. That's for and foremost. So what has been pledged as security so that they can have a recourse. It might be land, buildings, or other form of security, share pledge and all that. So insurance as a form of risk transfer can provide comfort to the lenders that yes, the security is protected in case anything happens with security. And business sustainability. Insurance can have what they call business interruption insurance, which can ensure the payment of debt, the payment of fixed costs, fixed expenses, or extra expenses that would assist the company to expedite in returning back to business when something happens. Transferring to third-party risks, for example, or liability risks being transferred to third parties, and balance sheet protection. Investors are more interested in strong balance sheet. If there's a shock in the balance sheet, the project becomes weak financially, and the inability to service debt becomes more likely. The shareholder value, the share value goes down, and ultimately it won't be able to attract capital. So companies with strong balance sheets are able to attract more investments. Return on equity. If something happens, a disaster strikes on a company, the shareholders want to know that they are going to have their return on equity, the money that they've invested, all the common stocks, the shares that have been bought. They want to know that the company will continue to prosper and flourish. So insurance provides some form of protection in terms so that if a disaster strikes, yes, it's able to get back on its feet and provide that comfort the investor is looking for. So in conclusion, I'm going to leave you with this piece, that the investors are more willing to put their money where risks have been identified, assessed, and adequately mitigated. And on this note, shukran.
Thank you very much, Mr. Eusoph. We'll just stay for a question and answer session. It was a wonderful presentation about understanding the risk and the general perception of risk in our business and insurance generally is that insurance is a risk reducing investment. in which the buyer pays a small fixed amount to be protected from a potential risk. That's what we take it. And of course, there has been different definitions of risk, but it was very good and enlightening to know about mitigating the risk, and that was, and the sectors you covered also was very good, regional, global, so interesting. Any questions before we call for the break from the audience? I believe we are running short of time and everybody is looking to the watch. Yeah. So probably...
everybody wants to manage the risk.
Yeah, so no one wants to, again, indulge in risk. So,
thank you.
Okay, so what we do is like, I'm seeing the agenda that there's a coffee break. Instead of that, we just finish our lunch for half an hour, and we can then come and combine the entire session with 3 presenters in line and before we call off the session. Thank you. We look forward to meeting you after half an hour. I need all your attention, please. Apologies, first of all, for the delay. Basically, this happens when you have, professionals. They are busy in their day-to-day affairs. So sometimes it do happens that we have to compromise somewhere. Unfortunately, in the panel, the gentleman who was supposed to come from Gulf Ray got busy with some other affairs. So I have to request my other panelist there to come and present. And particularly, if you see current issues and possible developments past of the Takaful idea, we had panel discussions, and in this panel discussion, you already saw Dr. Ludwig Stiftel there from Munich Re and contributing to that panel discussion as well. Now he'll throw more ideas on the current issues and possible developments past of the Takaful idea. And I'll just give a little bit of a briefing about this gentleman. He had a varied experience and a very specialist from the Takaful segment. And Dr. Ludwig basically is born in Germany, and I don't have to say when, let him be, he looks very young. Studied business, studied business administration and Oriental languages, most prominently Arabic. He speaks Arabic very well. And in Munich, after diploma thesis on Islamic banking in Egypt, he did his PhD in Islamic studies on Yemeni Islamic parties, involving studies of usul of fiqh in Yemen and Berlin. He joined Munich Re in 2000, working in the life department for Arab countries and subsequently in the non-life underwriting division as country manager for Pakistan and member of Munich Re's Takaful task force. In December 2007, Mr. Ludwig moved to Kuala Lumpur to head Munich Re Takaful. And in September 2009, he returned to Munich again to head the Center of Competence for Takaful in the Home Office. Apart from his family with 3 lively sons, of course, which we were discussing today morning, he still has a vivid personal interest in learning about non-European history, languages, and culture. So here's your dais. We warmly welcome Dr. Ludwig Stiftel.
Thank you very much. Good afternoon. I'm back. I'm back also with some of the issues we touched upon this morning at the panel. I think it fits quite well. Therefore, I had also proposed to do a presentation that has the following idea behind. I wanted to outline the discussions, the very basic discussions we still have in the Takaful and Takaful industry at the moment, to summarize it, somehow analyze it, and try to deduct some strategy and systematic behind it, which could give a hint to a roadway for further developments. Growth is a word that is very often used with respect to Takaful, but let's put it perhaps like that. It is normally growth that requires more of the same. Perhaps there are also possibilities to grow by doing a bit or something of other kinds of business and types. And I try to structurize that. It's the first idea. If it's worth working on it and developing it further, then we will do so. To go through the main points I want to make and a bit explain today, also it may be a bit abstract, is that the Takaful idea has taken a certain shape in today's world. This is the two funds, Tabarro-based commercial or hybrid mutual commercial system we discussed this morning. The next question is, this is a shape. What is the essence behind that shape? What is the intention or the maksat, if I may use that word? Having defined that, I would briefly explain, as I said, the discussions that are going on in different groups, like IFSB was mentioned today, Bank Negara, regulators, IOFI, and the Saudi regulator as well. And then the deduction of different forms for different environments and situations. And then I would make the point that what in my opinion could give a sort of analysis what is deciding on the different Takaful types, and this is the axis of cooperation versus commercial interest or social interest. Then the structure between consumer behavior and participants' behavior, consumer protection, fiduciary risks. And then the very important but very abstract point of differentiation versus the conventional industry, which was exactly the issue of the panel discussion this morning. How we set ourselves apart from the conventional industry to explain the value proposition and the added value. And as I would say, there is probably no one solution for every time and place. That would be quite odd. I've looked at it properly, because in the conventional insurance industry, you don't have one type and one system only. You have one principle, one working principle of insurance, but not one setup or one business plan. So what is the essence? If I'm to formulate the essence behind that this is refraining from non-halal investments. I made these points this morning regarding the value added. This is avoidance of riba, of interest, of bubbles, of earning without deserving. This is avoidance of gharar and maisir through the mutuality idea. The shape that is taken at the moment is by this Tabarro structure, and we had discussed this morning, that is a question whether Tabarro makes a difference. We are not all of the same opinion in that respect. And then one intention regarding the growth was always to approach the Islamic Muslim population that is yet uninsured, assuming that religious reservations are behind this being uninsured, and that Takaful can overcome that, grow the cake, expand the markets, add new lines of business to many of the markets in the Muslim world. And by the way, also serve the people. Okay, these are the topics that, as I formulated them or tried to summarize them, are being discussed at the moment. So you have at the horizontal line, you have the topics, and at the vertical axis, you have a comparison or a summary of the groups that discuss it at the moment. You have the topics of corporate governance, which were regulated by the Malaysian regulator last year in quite detail, and there was a paper of IFSB, of the Islamic Financial Service Board,